Regs, ticker GRG.L. They're listed in London. It's a leading British food on the go retailer, and they specialize in value for money bakery products like vegan sausage rolls, regular sausage rolls, sandwiches, sweet treats, and their famous steak bake. It's 100-year-old company with a strong brand that's embedded in British culture. The food's not healthy, but it's got its raving fans. But it's also cheap. And this could be an asset if we go into a prolonged economic downturn, which is looking a little bit more likely with the recent unexpected tick up in inflation. The company's busy scaling from 2,500 to 3,500 stores over the next couple of years. So there's growth potential, but this is still a good income investment, which is why I bought it. And you've got a dividend yield of nearly 4% today. This is a new holding for me. I'm giving this a rating of 3 out of 10 badgers, but I want to increase my allocation to income stocks. And I like Greg's. I think it's a good mix of income and growth.
So we just talked income and dividend growth investing with the Dividend Growth Investing podcast. So stay tuned for that. So I'm still, it's not really our bread and butter here at Wall Street Wildlife, right? So it's a little bit, feels a little bit odd to have this in your portfolio, to see you invest in this. And I think without having as deep an understanding of the company as you do, there's something about it that I don't like. And I'm going to say, it's not that it's income, because I get why you would want to switch over to just more, I don't know if boring is the right word, just income generating companies tend to not be remaking the world all the time. But my question to you is, out of all the companies in the world, including just the income investing one, is this really the best? This really has that special magic alchemy of being so cheap but still growing, that you think out of all the other options, this is where you want to get your income from?
Yeah, I think it is. I'm not experienced as an income investor, but I've looked at a bunch of income stocks and I've been trying to find some that I feel like I understand. Like I don't eat at Greg's ever, really. I eat there a little bit to do my due diligence. And I look at the stores wherever I drive past now, like eyeball them, see how many people are in there. Because I'm now owner. I like being an owner of stuff. But like the stores are busy. Like people like this brand. And the reason I'm looking at this sort of sector of, I suppose, like recession-proof companies is because I don't know where the world's going. And maybe we're going to navigate our way out of like inflation and financial difficulties, but maybe we're not. And I don't have much inflation proof stuff in my portfolio. And I do think companies like Amazon, Costco, Walmart, like UK like supermarkets that maybe sell at like a lower price point, like Aldi. I think there might be a private company. Like companies like this are going to be more resistant. Like consumer basics companies are going to be more resistant in a downturn. So here's a company that does pay a good dividend, has growth opportunity, like they're planning this big scale out. Like there's a strong argument. I know you're not a Brit and you've probably never seen a Greg's. They're all over the place, like 2,500 branches across the UK. And the UK is not a massive place. So that's quite a lot. It's probably one of the biggest fast casual brands there are out there. It's probably them and a company called Costa Coffee that are probably like directionally 2 to 3,000 branches. Even there's like, that's more than McDonald's. There's something like 1,900 McDonald's in the UK. There's an argument that maybe they're at saturation point already. And this brand will never scale internationally, right? It's a British brand. You might get, as a bit of a joke, like occasional, like a branch in Hong Kong and a branch in like, the places in Spain where Brits go to cause mayhem, but it's not going to scale out at any meaningful way outside of the British Isles. I don't quite buy into the saturation. I do think they've got room to expand. And I see there's one location in London, there's like 2 Pret a Manger's basically opposite each other. I think this has got room to go. And I think you triggered me there when you said it. It's incredibly good value. Like the stock is pretty beaten down right now. So I feel like getting in at a reasonable entry point.
let me keep pushing back just a little bit more. The fact that you don't like the food yourself is interesting too. So you're just using your investor acumen to say, well, there's lines and it's busy. You're overruling your own, limited anecdote of one, right? So that's interesting, though. I would say in the negative column, all the other things being equal. I don't know. That's just a side comment. But as you were talking, I just thought to ask to find out what the PE ratio is of Starbucks, Chipotle, and Greg's. And now PE still isn't the best metric to use, but it's a place to start. And you're right. I mean, it's so interesting that Chipotle is close to 47, Starbucks is 33, and Greg's is about 11. So you're talking about a difference of 3 times to 4 times as expensive, which is pretty massive valuation difference. Starbucks pays 61 cents a share. Dividend, Greg's pays 46, what is it, pence?
Well, you have to look at the dividend yield because it's like
Yeah.
it's like the cost of the dividend versus the value of a share. So
Right.
yeah, Greg's is about 4% based on today's price. Does Starbucks even pay a dividend? I
Yeah.
don't
It's
even know.
2.6%. So
Okay,
basically, the dividend yield for Starbucks and Greg's is kind of similar. Chipotle does not have a dividend.
it's quite a big difference. 2.4% versus 4%. That's like nearly double, right?
My data here shows 2.6% and 2.9%, but I don't know if that's currency stuff. Still, Greg's is the larger one, so all other things being considered equal. Anyway, it's such an interesting pick. I got to sit more with this beyond the I don't like it attitude because it's certainly interesting because in that contrary spirit there's so many good investments are like these kinds of call it ugly ducklings or overlooked and nobody has heard of them, not many people talk about it, and yet they could really do some good. So props to you for looking into something like this.
Yeah, like if anything, I think Domino's is kind of recognized by quite a few investors as being like a good investment.
Mhm.
I know it was a favorite of our ex-colleague Matt Cochran, and this in some ways this is a bit like a kind of Domino's. Like it's unhealthy food, but it has its fans. Financially, it's actually in a pretty robust place. So
Yeah.
you might sort of think of it that way.
Okay.
Yeah.
Cool. Well, good luck, you carnivore sausage eater. I do hope they treat their animals well, which I'm almost 100% sure they do not. But
They treat their employees well. They've got like an employee ownership culture. So that's I quite like companies like that. Like if you work there, like you get like essentially like a share in the company. You start owning stock, you vest stock as you go. Anyway,